Welcome to another add-on video, and in this one I want to start describing the first and second test of our entry and also Confluence because I have a lot of questions in regards to how do you know that you should be running your fibs going down or going up. So I want to show you guys a handful of the methods that I have already described and how we can just all collectively put it together and you will use it as Confluence. So I will start off by going over the trades that I took this week. Well, today I didn't take a trade. I missed this trade. I woke up a little late today, but it was very simple. You had the first bounce after the EMA cross. You had the first bounce. So you draw your fibs from here to the bottom. And if you notice, this leg wiped out all these previous lows, even all the way back here. So you run your fibs from here to the bottom. You had the pullback, 79 entry. That was a beautiful trade that actually completely did a complete measure move in a matter of an hour or so. So that was today. Unfortunately, I couldn't trade it. Hopefully tomorrow I can get a nice setup. And yesterday it was very, very nice. Yesterday, same thing again. EMA's cross does the first bounce. I put my line on the first bounce or start the the fibs on the first bounce all the way to the bottom. Wait for the retrace, 62 entry short. I took my short here, took profit at 10 pips and let my other runner. I actually stopped out right around here. I should have taken profit down here, but I didn't. I was waiting for the complete measure move. But since it was retracing on me, I just took profit right around here. So that was a good trade. And on Monday, it was a fairly easy trade as well, since the previous week, it was bullish. So, you should anticipate a pullback and a continuation on the test of these highs here. So what I did was I ran my fibs from this leg here because we had a bounce on the 200, and also this leg here took out this previous highs. So I ran my fibs from the bottom to the top, wait for the pullback, and go long, and it did a complete measure move and it kept going up for the remainder of the day. So this is one thing that I wanted to describe here. I had a few questions in regards to the test of our entry, and in a sample here, if I would have entered here in this trade, I would have taken profit at 10 pips. I would have set my stop at break even or break even plus one, and on that pullback again, I would have gotten stopped out at 0. So I would have just made $600 in this trade. However, I entered on the second test because I didn't see this test here. By the time that I arrived on my computer, I saw the second test. And the only reason why I took the second test, it was because if you notice this candle here, this is an engulfing candle, or this pattern here is called the tweezer bottom. So whenever you see a big flush on one bearish candle and the next candle is taking away that retracement or that pullback that I had, see, if you notice, these two candles are approximately the same length. So if these two candles are approximately the same length, that means that the bears that took it down, they got wiped again by the bulls. And in this case, they just retraced a bit, had a small resistance, dynamic resistance, because of that 50 SMA. And that is the reason why we had another bounce on the 62, and then it continued to skyrocket. So that is one thing that I wanted to lay out. Just make sure that you take the first trade or the first entry. And once you take profit, just let your other position stop out at break even. Don't risk leaving your stop at 10 pips after you take profit, because this one could potentially, this dynamic resistance could have easily pivoted the entire setup and had it bounce here on the 200, and then here you would have just gotten stopped out at 10 pips, and you would have lost the 10 pips that you earned on the first trade. So with that said, always take the first entry. Even if you get stopped out on the second one, just let it be. In this case, you notice that you had a lot of strong indication here that it was going to continue to go up. Overall momentum was bullish, and also the bulls wiped out that bear's price action that it gave, and it just came back down as a reaction of the 50 SMA. So that was that trade. And also one thing that I want to point out is having a lot of confluence. So I'm going to go over to the 30-minute. And on the 30-minute, since I have my institutional levels here, I am going to go down to the 15-minute while using the 30-minute chart. Just it makes things a lot better. So here was Tuesday's trade. It was after the EMA cross, the first leg right here, all the way to the bottom of the body, wait for the retracement, and you had a 62 short. All right, so what do we see here? We have 800 institutional level. So right here we have confluence with the institutional level. So it was actually slightly risky. So I put my alert 2 pips below the 62 because there was a strong potential that it was just gonna kiss the 62 and right away reject it just because of the strength from this zone right here. So that is why I went all in right at the 62. You have confluence with your institutional levels, you have confluence with your fibs, and also this is already a confirmed market, a temporary confirmed market environment. So that was a very nice short trade right there. And again, I will go back to the trade from today. Well, actually, the one from today didn't have confluence with any zones. What it had confluence with was with the EMAs. And one more thing, I noticed that on one of the add-ons, I was speaking about wick fills. So on the wick fills, it's also one of the ways how you can take your trade as well. For example, with this same trade here, this big bearish move here, it was a very bearish candle on the 4-hour. The 4-hour. And that big bearish move, it was this candle right here. And if you notice, it had the big wick on the bottom. And then our 62 short was right here on the top of at the top of this wick. So if you remember the wick fill add-on video, it was describing how wicks, when prices in momentum, wicks will get filled. So momentum was already bearish. You had consolidation in this doji here. And then the next candle, most likely what I was going to do was retrace, which was our 62 short on the 15-minute. And I was going to fill this previous wick right here. So that is one of the reasons why I also went short. And I avoided this 14 EMA that I had here. It was pretty evident that it wasn't going to have a bounce on this 14 EMA because the momentum was currently bearish. I was just consolidating with this doji on the smaller time frames, and the next 4-hour it was going to do a wick fill to the downside. And that is exactly what we have here. We had down pressure, retracement, and then again this was the wick fill. So that was a very, very simple trade. And those are things that we always have to pay attention. Before you take the trade, make sure that you see your EMAs crossing and you see the bounce. Most of the time you will see that happen. Make sure that your 62 or 70 or 79 entry, it is very close to an institutional level, and also bouncing off either the 14 EMA if it has a lot of pressure, or the 50 SMA if it's just normal volatility. And one of the other things that I wanted to go over is always focusing also on the higher time frames, because the fibs, you will see it in and out in any time frame, because the markets are, or the charts are fractals. Fractals meaning that whatever you see in a smaller time frame, you will see on the higher time frames as well. So if you notice right here on the daily chart, if you draw your fibs from the beginning of the leg to the bottom of the leg, Right now we are on a 62 short on the daily chart. And if you notice here on the 4 hour, from the top of the leg to the bottom, and this was a 62 short as well. And at this point, since we have been covering a lot of that bearish momentum, now I like to run my fibs from the bottom of the leg to the top. And we should see a small bounce right around this 70 level right here. So maybe for the continuation of the day, I would just be consolidating, but possibly tomorrow, Thursday, we'll see a quick bullish move and we might find resistance right here on this 50 SMA. So always play devil's advocate and do the trade. Even if you're in a short here or you're in a swing position and you're short, just run the fibs against you and see where you might potentially see any support or resistance if you go in the opposite way. And also, I want to go over how I run my fibs very quickly. You guys are very familiar with how we do it on the 15-minute, which is market structure break, running the fibs. And most of the time it's after the EMA cross. Not always, but most of the time. If the leg that is breaking structure is above the EMA cross, just take it up there. But most of the time it will be after the EMA cross. On the 30-minute or 1 hour chart, our fibs are always going to be drawn from zones to zone. So basically in this move here, for example, we have market structure break to the downside from this push here, and it was from this zone right here. So this zone to this zone right here, which was the last zone that it repelled. It almost touched. I missed it by like 1 pip. It almost touched, and you can see the short. It was right here. It was a 70 short to the downside. And also, if you stretch it, it will be, since it actually pivoted down a little lower, you move it down, and you will see another 62 short right here. So on the 30-minute or 1 hour, is always going to be from zone to zone, 15-minute market structure break, and on the 4 hour or the daily chart, you will measure the entire move. Remember, never use the wicks. But on the 4 hour is the entire move. I do not look here for a market structure break. I look for the entire move from complete pivoting points on the support and complete pivoting point on the resistance area. And that is how I draw them on all different time frames. Use them together collectively and you will see the entries that you actually want. If you guys have any questions, feel free to DM me like always or send me an email. Thank you.